Candlestick analysis involves a very simple concept. It allows investors to observe the obvious. The obvious was, on Tuesday, we finally had a day where the Dow closed back below the T-line. Observe the obvious. Up until that point, ever since early February, they weren't able to close back below the T-line. The markets have been in an overbought condition now for over a month, and the only difference that changed this week was they could finally able to have enough selling strength to close back below the T-line. Even though it traded positive yesterday, it still had to be kind of speculated that if they didn't open positive and trade positive, continuing the uptrend, any selling at this point would kind of confirm the fact that there was new selling strength that was indicated because they breached the T-line. This allows us to make our next assessment. Where is this trend now likely to move to? They could be pulling back here to the 200/50-day moving average area as a pullback. Now, with candlestick analysis, that becomes a much easier anticipation of a pullback because of the selling pressure. So we can just throw things like the Fibonacci numbers on, or throw the moving averages. So we don't know how far it's going to pull back, but at least if we pull other indicators or put other indicators on the chart, we can see how far back it might pull back based upon once it gets to one of those levels and we see a candlestick buy signal, we know that was where the pullback had ended. Another element that can be incorporated into a trend analysis is knowing that the Japanese rice traders for the last 4 centuries have observed that once you start seeing indecision in a price trend or a market trend, that tells you there's probably a change coming. And we could see that in the the NASDAQ. A doji, 2 days of indecision. A big up day, 2 indecisive down days, a big up day, a down day. This whole toppy area is telling us they don't know which way they're going to go anymore, and that indecision is a high probability indication that they're going to start pulling back. So at this point, we're starting to look more for short positions, anticipating that we might have a few weeks of pullback in this market. And that same assessment is easily made when you're looking at any chart, such as June gold. Notice as it came up and started pulling back, where was it pulling back to? Right smack dab to the 50-day moving average. With candlestick analysis, we can see which signals were occurring here. We had a bullish engulfing signal after a little doji, kind of a left-right combo, a very strong reversal. Came back down on Wednesday and supported right on the 50. Thursday it opened and created another bullish engulfing, trading just up here above this downtrending channel. This makes the assessment very easy as far as which sectors might be acting best on the next go-round. Positive trading from here could put us in wave 1, wave 2, going into wave 3, which allows us to analyze gold stocks. We can see in our recommendation on SA where the fry pan bottom was in progress, and notice what happened today. Right where the fry pan bottom started, we had a gap up through that level. What did that tell us about this resistance level? We weren't resisting there anymore. More than likely, we were going to have another wave to the upside, wave 1, wave 2, going into wave 3. So having that type of assessment, we can see what was happening in Nugget, the gold miners 3 leveraged ETF. Bullish signals. Now we have a gap up through this downtrending channel. Also a case where we have wave 1, wave 2 moving sideways. Now they've gapped out through this area, making a very strong probability that if gold keeps moving up, this could be in wave 3 going much higher. All this does, or all candlestick analysis does for us, is shows us the most common element that is going to occur in price movements time after time, and that's what human emotions are doing. Right now they're showing they've gapped out into a new area. We're going to be long Nugget for a while. That'll be it. We'll see you in the chat rooms.